friends, Amanda here. Made it to the last video in this training. And so this is the third video on end of year taxes. And in the last video, we went through categorizing your income and expenses as the tax categories. And then in this column, you'll see it's your income statement based on Schedule C, like I showed you. So what it's doing over here is it's totaling the amounts for these categories. And then what this column for is for your adjustments. And that's what I'm going to cover, some of those fun stuff in this video, which you will see more questions as you scroll down here. So basically, all of your straightforward business expenses are 100% deductible, right? Then there's the things that are part personal, like your home office, your mileage for driving, you use your car for personal, and any other expenses like that where you have part personal, part business. The IRS doesn't tell you exactly what to do, but you always need to allocate whatever portion of the expense is personal and not write that off and just write off the business percentage. So this column here is to enter any of those adjustments that are straightforward. So one that's very straightforward is meals and entertainment. The meals portion and any entertainment costs, which you can certainly deduct, it is a qualified business expense when you are doing that with someone for the purpose of ultimately earning money in your business. You just want to make that connection and write that business purpose on your receipt and who you are with, whether it was a client, employee, or possible partner, etc. So this column is adjusting 50% of meals and putting that here. When you take travel, often we'll add on a personal part of the trip. And so there are rules. You could just minus out any portion of the trip that was personal here. The vehicle expense, we will go through down here, and the home office. Now, we'll first go through other business information that you need. So this is here for you to fill this out. If you're doing your taxes yourself, it'll help you get all this information together because the online tax softwares will ask for this information. And it's what you need for your records anyways, so it's a nice place to keep it. If you are hiring someone to do your taxes, you can fill this out and give it to them if they don't give you something equivalent to fill out, and that way you'll be all ready to go for the taxes. So the first question is, if you paid someone more than $600 during the year, yes or no? Because if yes, you have to complete a Form 1099 and submit it to the IRS and that person. And the form asks if you did do that or will do that. And I actually have a video, it's my most popular YouTube video that goes through completing that form. Now, what method of accounting do you use, cash or accrual? I talked about this a little bit in the first accounting video. Cash is typically what an individual uses. As you grow your business, you may want to switch to accrual, but that's only when you get to the bigger stages. That means if you did work on December 31st and you got paid on January 1st, you don't include the amount to be taxed. It's just kind of the common sense method. Business name, if you're using a name other than your personal name, so that means if you filed a DBA or if you formed a single member LLC. Your business address, if it's different than what your personal address is on the front of the return. And your employer identification number. You only need this if you hire employees. A lot of people will add it on because it's so easy to get one yourself on the IRS website. So companies will throw that in if they're doing other work for you for a fee. So no need to ever pay for that. It's very easy to get. All right, so the vehicle deduction. Do you own your own vehicle? And do you have another vehicle for personal use? So yes or no. The reason they're asking these two questions is because if you don't have another vehicle for personal use and you take 100% of your only car for business, then you're kind of asking to be audited, right? Because they know that there's no way you didn't use your car for personal. So that's just kind of a common sense check. You do have to own it. They do take the information for it. a lot of softwares will let you enter this information. Ultimately, you need to know that you had business miles and that you kept records. I rarely see people get audited for it, but you are required to keep a mileage log that tracks every trip, what the business purpose was, the odometer settings. But there is really cool apps now that do this for you. One is that I've tested is Mile IQ. I work from home, so I don't actually have a lot of business miles. Technically, even just driving to the store to get supplies does qualify, but in my case, it's just not worth keeping track of it. So then you get 54 cents per mile this year. So you times that by this, and that's what this cell is calculating for you, $484.38. The date you purchased the vehicle, the date you started using it. Part of the reason all this other information is asked for and the cost is because there is another method called the actual method. So I said if you want to claim the actual method, you can put that amount here and it will automatically pull up here. But right now it's pulling from the standard mileage rate right here. Now, the actual method, you have to keep track of everything, all of your gas, all of your repairs and maintenance, all of the costs. And then you take depreciation on the car and you take a portion of all of the expenses that's based on your business miles to your personal miles. Whatever percentage this is, it's around 50% here. So you'd get that percentage of all of those costs. Now, that requires you to not only keep this mileage log, but to also keep track of every gas receipt and every receipt you have. So typically, I do not recommend taking the actual method. Now, if you say, oh, I want to buy this super nice car and write it off, the answer is still no, because there's limitations on the depreciation and on lease payments for luxury vehicles. Basically, up to a $20,000 car is accommodated. Beyond that, over the useful life of the vehicle. Beyond that, it's all limited. So typically, if you do a lot of driving, just use the standard mileage rate and save yourself the headache. All right, step 2. Now, keep in mind, if your vehicle is 100% for business, you can deduct the whole thing and all expenses related to it. But make sure you have another vehicle available for use. Otherwise, it's just not believable. All right, step 5 for the home office deduction. Same thing here. If you rent a location specifically for your business, and that's your business address, and that's where clients come or whatever, that's 100% deductible. For your home office, because it is your home, they're giving you a deduction. And just like the vehicle deduction, there's a simplified method, which I recommend taking and what this accommodates here. So these first 2 questions, though, these are the questions that are required for you to take this. So if you go to a tax preparer, that's why if you've answered these, they will give you this deduction. Otherwise, especially if you have another location, they can be very skeptical of giving you the home office, depending on their style of taxes. So these are the requirements. Do you use your home office exclusively for your business? That means no surfing the web for personal reasons, which is pretty strict requirement. However, you just need to document that that is what your home office is used for. Then in the second question, do you use your home office regularly for business work? That's the base requirement. Now, if you work at home, obviously the answer is yes. If you don't work at home, so it's not your principal place of business, you can still qualify if you do management type activities at your house, meaning you look at the records or you do planning or you call clients, and so often that will happen if 1, you do your work at your clients' houses or businesses, or 2, you provide a service to clients at a location you rent, but you don't do the management activities there. You don't necessarily have an office there. All right, so once you qualify for those 2, you're good. There's a simplified method, like I said, I recommend. up to 300 square foot office. So you need to just estimate as close as you can the square footage of the office, and then you get $5 per square foot. So the max deduction using the simplified method is what happened there, being annoying. So the max deduction is $1,500. If you have a much bigger home office in your house, it could be worth using the actual method. Most tax softwares do ask for an estimate of your whole house. Just estimate it out. But if you do have a very large home office, it could be worth using the actual method where, just like with the mileage, you need to keep track of all of your home expenses, utilities, mortgage, or rental costs, whatever you have, you just keep track of it all, and then you'll take a percentage based on the size of your home office to the entire size of the home. All right, well, that's all for the fun deductions, and the home office is added here because if you have a loss here, you can't necessarily take the home office deduction, but you will be able to carry it forward for future years. There are other videos on my sites that go into loss situations. However, because this training was really made for people who are providing services, typically that's not the type of situation you're in with a loss. So I'm not going to go into that right now, but I look forward to hearing from you. If you have any questions, again, if you want help getting your stuff organized, be sure to check out my website, amandarussell.mba. All right, thanks for watching. Good luck with this.